Man, everything changed quickly, didn't it?
It's pretty crazy. Yeah.
Insane. I didn't expect it to get to this point, quite frankly.
That's why I wanted to get you guys on today, just to give it a little bit of time to settle, because man, just overnight people aren't qualified anymore, right?
Yeah, the guidelines have changed. It's going to get a little tougher right now. It's going to get a little tougher. Yeah, this reminds Greg and I kind of like back to 08 when the financial markets were so liquidity dried up, essentially, right? So that's where on the back end, people don't realize that, you get your funds from the secondary market, the bonds and the bondholders, you get it from the secondary market. So back in 08, they call it subprime, right? When you were not a perfect borrower, or they had these programs for self-employed borrowers that we were talking about not too long ago. That's all been shut down. There's no money for that right now. So it's really down to a paper, which is conventional financing, Freddie and Fannie, and FHA and VA. That's really the financing available right now. And the guidelines have gotten, and the guidelines are going to get tighter in the interim. There's no appetite, what they call, for mortgage-backed securities right now because of the uncertainty in the marketplace.
Yeah. So is there a benefit of being a direct lender versus? I
think direct lenders are in a worse spot.
Yeah.
And I'll tell you why, because they have to underwrite to the, Freddie and Fannie guidelines. And many times, since they're selling their loans so quickly off their warehouse line or wherever, that's where they have an interim, in between the time they buy them, they have a lot of overlays on their guidelines. I mean, additional guidelines on top of. So I think they're going to be in a way tighter position. As a broker, small, correspondent guy, we can go to multiple outlets and they're going to fund the loan. You don't want to fund loans off your warehouse line right now. So,
do you guys understand? Do you guys know what the term overlay means?
I think you've talked to it before, where there's just more guidelines on top of other guidelines.
Exactly. That's exactly what it is. So it's just like FHA might say, hey, look, we're okay with a 620 score, but a certain bank might say, we're not going to do a 620 score. We're going to overlay that, and we're going to require a 640.
Right. Which that's kind of where FHA is landing right now. Most lenders, when I say most, 90% are at 640 minimum FICO score going forward to qualify, as well as I believe that. I'm not certain about VA. We'll get clarity on that, but certainly FHA.
Wow. So how would somebody work on their credit even to raise it just a little bit right now?
Well, there are certain things we can definitely advise people to do, and we have done in the past. I mean, I think a lot of you guys probably already know you can pay down some of your credit cards, if you have higher balances. So that doesn't change. That doesn't change. That's the same.
Wow.
All right, I'm ready too, whenever you guys are.
Yay, let's get this party started.
Well, I guess my first question is, because I'm getting calls about this like crazy, but what actually is loan forbearance, or the relief that they're talking about from mortgage payments?
Greg, you want me to tackle that or what?
No, I got it. So typically, the way I've always understood a forbearance is they'll let you take a certain amount of payments. It's not free money though. So a lot of people, and I've already had people calling me on this, and they think, I'm just going to be able to skip all these payments. And there's no consequences or ramifications for skipping those payments. So typically what they do is they take those skip payments and they'd add them to the end of your loan, and you're going to pay interest over those loans, and they're going to accrue interest as that money's sitting there and you're not paying. My understanding this time around, the way they're going to do it, and I'll have to get clarification, is if you skip 3 payments on the 3rd or on the 4th or 5th month, you're going to owe those payments. I will have to get clarification, but I've heard that from 2 separate lenders now. So again, on that, we'll have to get clarification.
So, I mean, there's a potential that you're digging a bigger hole. So,
Absolutely. I recommend nobody to do that if they don't have to. If they need to, then they can, but I don't recommend doing the forbearance to anybody.
So long story short, if you have the means to make the payments, you're way better off making the payments.
Yes. Now we do have a way, with a refi, if we refi somebody, there is a way to skip 2 payments without putting that on the back of a loan. So that is something that you can let people know that, hey, there's the potential, if you refinance, to skip 2 payments to get you through this tough time without having that money added to the back of your loan, or without being responsible to give that money back in 2 or 3 months, because that's going to be a load for anybody. If you skip 2 payments and then 3 months or 4 months from now, you got to make all that up at one time.
Yeah. Well, let me piggyback here. So, Greg, you're absolutely right. Forbearance, they're just gonna, it's an interim hold, right? So they're gonna add that to the arrears, what's owed. So the biggest part on the financing part of it, the secondary part is, the mortgage servicer is on the hook for the payment to the bondholders, regardless, whether that client makes that forbearance, that payment or not. So that's what's created a lot of uncertainty on the back end. And you've seen these huge movements in pricing from FHA from one day to the next. They don't know where to price the loans. That's caused illiquidity, issues on the back end on where we get the funds. So yes, advise your clients if they have the means to make the payments. It's going to help out everybody, especially them in the long run. And so, long story short, make the payment if at all possible.
All right, and then kind of piggybacks to my next question. The next one would be, since some people are being, put into temporary unemployment, and maybe they want the option of refinancing to skip a couple payments, how does that affect their ability to qualify? I mean, traditionally, I know that being put on unemployment or losing their job would make it, pretty hard.
It's the same thing, man. If we can't verify employment, if they're on temporary leave or unemployment, we can't use that income to qualify. So hopefully they can qualify maybe if a spouse is still working and employed, but they're gonna always go off of, them being employed to use that income.
Okay.
Yeah, and right now they're gonna verify employment a couple of times before they fund the loan.
A couple days in a row.
Yeah. So
normally one time they're going to verify and re-verify.
They're gonna verify before it goes to docs a couple of days, and they're gonna verify the day of funding before they release the funds.
Yeah, obviously not a laughing situation, but just trying to make the best of it.
No, it is what it is. Absolutely.
Got it. All right. So if someone had to skip a payment or use forbearance, what's the best way to go about that? Like, is it literally just not making a payment and then trying to make it up as fast as possible, or do you
call the lender, you call the servicer and say, look, I'm having financial hardship.
Okay.
I can't make this payment right now. Obviously, what's going on. Here's my plan. You set up a plan. They'll probably do some sort of a payment plan to catch them back up.
Okay.
That's my best guess. What do you think, Greg?
Well, I agree with you. You definitely got to call your lender to arrange that. If you just miss the payment, I'm fairly certain that they're going to put a late on your credit, which is going to hamper your ability to do a refi down the road if you need to do a refi. So definitely they need to reach out to the lender to set that up.
And Dustin, they need to call before they miss the payment, right? You want to set, even though they're saying you're going to get these 90 days reprieve, they probably won't put a late on your credit, but you want to set that. You want to set it up early so they can work with you on a payment plan or whatever it is to catch back up.
I would advise them to monitor their credit too if they've made this decision with the bank and the bank has agreed to let them miss a payment. Just monitor their credit so they don't get a surprise a year down the road and find out they have a late on their mortgage.
Got it. So call the lender direct, talk to them early, and keep an eye on the credit to make sure they don't just accidentally throw something on there for you if they agreed to something.
Yeah,
correct.
Absolutely.
Okay, right on. So what do you guys think the effect of the COVID-19 pandemic will be on the mortgage industry as a whole? I mean, do you have any predictions at all? Or I know it's all just predictions, but.
That's a good question. I can only go back to kind of what the financial crisis was in 2008.
Yeah.
Where it kind of just crashed because of the prices and the subprime, the loans they were doing, and people weren't having any intention to live in the property. The market crashed, right?
Yeah.
It's something very similar happening to the, to the liquidity. Anytime they say liquidity crisis, that means there's no money on the back end to lend. That's why the Fed did all this stuff, right?
Yeah.
I equate it similar to that. I just don't know how soon we're going to get out of this, right? So in the interim, mortgage is going to be pretty squeaky tight. What I mean by that, more your A-paper borrowers, higher FICO scores, you know, and the guidelines are going to be kind of what they are going to be. It's not like, oh, is this an exception? No, you're going to have to meet the guidelines. So we're going to have to do a pretty good job up front of trying to pre-approve to the best of our ability to the guidelines that we have now. And there may be changes as we go along. So you're just going to have to kind of bear with us, but we're just going to have open communication.
Okay.
Greg, anything else?
No, I think you covered that well. Yeah, no, I don't have anything to add to that.
All right. And then as far as like the loan process now with everything that's going on, how has that been affected for like your current files? I assume you're probably working with some refis and stuff at the moment.
Yeah, Greg, you want to cover that or?
Yeah. Well, I could tell you the refis are everything's moving a little slower because the rates did drop and they hit pretty much rock bottom, the lowest I've ever seen. So it is taking quite a bit longer to close a loan. I mean, you guys know how fast we typically are. So even with our purchases, guys, it's gonna take potentially a little longer than usual to close, because with a lot of people working out of their homes, you know, and working, you know, off their computers, everything moves a little slower. So things are definitely going to take a little longer. I did have one particular refi in process that was approved and had lower scores, and due to the lower scores, they went ahead and suspended the loan even though it was previously approved because of the FHA guidelines, changing their requirements.
Wow, so things are changing all the way through, huh?
Things are going to change rapidly, guys, and what we're going to do is we're just going to try and keep abreast of that. If we have any pre-approvals with you, you know, and we think something's going to change, we're going to do our very best to let you know.
Got it.
So,
and if you
so the pipeline, real quick to piggyback on that, it just depends, right, Dustin? There's some lenders right now that we could still quickly move files through the system. But if you want the ultra lowest rate, there's a couple of investors that are they work on very thin margins, right? Those are gonna take longer, man. But that's just on a refinance. Sometimes they could wait a little bit if we can lock in the rate. But it's hard to lock in the rate up front because you can't meet that 30 days. So we just submit, set it up, and we get the file working, and then we lock it the best possible execution when it's ready.
So let's say we get someone that does want to write a purchase, you know, contract. What should we be putting for escrow days at this point?
I would say 35 days.
Okay.
I agree with that, 35.
Okay.
If we can close before that, everyone's happier. If you start extending, you know, people don't like extensions, right? So.
Yep, for sure. I think at this point, anyone would be happy to receive an offer anyways.
Yeah, absolutely.
Yeah. And I know this is like kind of an impossible question to answer, but it's more of just what your opinion is. The way I understood it, and stop me if I'm wrong, was we had a flood of mortgage refis, and that flood of mortgage refis with the very low interest rate caused them to bump the rate back up to slow things down. Going forward from now, well, first, is that part correct? I mean, that was just what I was told.
I think that part is. I think it's 2 parts. I think that's correct. They need to slow the business down, and then as COVID-19 got worse, you know, in regards to what was going on in the market, there was so much uncertainty in pricing the loans. They didn't know where the hell to price the loans. So the spreads got bigger, and that's why you saw a 0.5 point swing in a day.
Got it. Going forward, like, let's say when we're kind of on the other end of this, what would you predict they would do with rates?
Again, that's what Warren Buffett calls a noism.
Yeah,
I don't freaking know.
Yeah,
you know
that's a fair answer.
And one thing, it's so hard to predict, and I'll let Greg kind of, chime in here as well. But I think they're going to stay kind of what we're seeing right now. They may drop a little bit once the economy gets going. Because theoretically, the loans should be, to me, rates should be lower right now because the bond market's ultra low. The rates are usually based on the 10-year bond market. It's under 1%. We haven't seen
things don't seem to be correlating how they normally do.
Don't. That's why it's uncharted waters, right? It's like all over the map. That being said, the rates are still pretty low on the conventional world. Government has priced up a lot higher. So Govy type loans, VA, FHA, you've seen a big price increase on those.
They got a couple bills. They got a couple bills to pay. It looks like.
Apparently. So to answer your question, I sure hope they come down. It'll be best for all of us, right?
Yeah.
Once we get out of this thing.
It's my belief that they'll come down. Of course, that is just a guess. But with that said, even without COVID-19, I never really knew what the rates were going to do anyways, because they're tied to the stock market and the 10-year bond. And if I knew what those were going to do, I'd just be playing the 10-year bond, and I wouldn't need to do loans. I'd be getting rich that way.
Yeah, right.
Yeah. So,
well,
I mean, typically the rates track with the 10-year bond. If that's up, rates are up. If it's down, rates are down. But
awesome.
Right now, it's not tracking the way it normally tracks. So it's definitely really unclear.
Okay. Yeah, that makes sense. So as realtors, like with what's going on right now, is there anything else we need to know other than just the little bit longer time frames, asking for longer escrows?
I think it's important if you have any pre-approved deals, because it's going to be hard for us to keep track of every deal that's pre-approved, that you reach out to your lender and you ask, hey, is this deal still okay?
Got it.
Yeah, so I mean, I think that's definitely something that you guys on your end can do to help your lenders, keep track of everything as well.
Some extra checking up.
Yeah. And I think as you start getting offers on your listings, you gotta really lean on the cross quals a little more. I think it's important to take a close look at those and making sure that they truly do qualify.
Got it. Right on.
I'm sorry. Go ahead, Dustin.
Oh yeah. Anything you guys want to add, or tips or advice, or things we should be passing on to our clients?
I actually wanted to see if I can ask you, what are you guys seeing? What hurdles are you guys running into out there right now?
Well, really what, the original hurdle was, we weren't really even supposed to go in houses at all, even vacant ones. And they've kind of loosened that up a little bit. But I mean, really what it comes down to is everyone's pretty uncertain. There's not a lot of people that want to go out and, look at stuff. And I think it might be that way for a little while. We're still able to accommodate the ones that do. But, I'm more or less just trying to be there for people and, collect as much information as I can. And when people are ready to get going on something again, I'll be here for them,
Right.
Well, at least they declared you guys a vital business.
Yeah, that was huge. I mean, and we have, and it's true. So I have 2 listings that I'm going to have. They have to go up. They're vacant and they're being paid for, and it was pretty devastating to them that they couldn't at least try to get
right.
it.
Well, let me ask you kind of the impossible question then. What do you think values are going to do?
Man, it's kind of like that. That's like it's uncharted territory. It's kind of like that question about the interest rates, I guess. Values are, we move in these 90-day cycles, right? So sometimes it's hard to see what's happened now. We don't really know where it is yet. I mean, I would guess there's going to be some easing in price. I mean, there was so much competition at the beginning of the year that prices, I think, got driven by, I mean, just from what I was seeing, probably 3 to 5% at the beginning of the year, and almost like an artificial inflation, but I know that at least has to slack off. But other than that, it's kind of, It's hard to say. I know we're not going to have the same competition driving the price. That's for sure.
Right.
Yep.
And you're not going to have as many sales, obviously, in the next 90-day cycle. But it's great opportunity for buyers. So I think if we can focus on some virtual type of, you're going to do virtual tours, I would imagine, right, of the homes, and you're going to be posting those
Yep.
online. Jessica is probably going to be, handling that and involved in that. But if we can market to buyers, because I really believe when they get through at this end of this cycle, they're going to be in a better position to buy, right? Because they're going to be able to negotiate a better deal. There's going to be less buyers, let's face it. There's going to be less buyers, less competition. And, some people may need to really sell that house.
Yeah.
So,
and that's the message I've been communicating really is, hey, you got all these people that have been waiting and waiting and waiting for something. Well, here's a large event. This is your chance,
Right. So let's get you pre-approved because the lenders are getting a little tighter. Let's make sure what we need to do to button up your credit. And going back to you on what you're telling your clients, try to manage your credit as best as you can. I mean, you got to get through this cycle, but let's try to keep those balances not maxed to the credit limit. It's going to jack your score, right? Try to make your payments because that's going to affect your score and ability to qualify.
Yeah, and obviously everybody's been affected, but out of the 8 or 9 buyers I had lined up, I got at least 3 or 4 that are like, hey, we're still on track. We just kind of want to see where this goes, and not everybody's laid off.
Right. Right.
So they're out there. I mean, I got some that are excited about it, not about the situation, but about the opportunity, I should say.
Exactly. You got to look at it that way. That's a great point.
What's funny is I feel like I've been preparing for this forever, but not this. I didn't know. You know what I mean? Like I was preparing for what happened before, not total shutdown, but whatever. You take it as it comes, which who knows? I mean, that might actually be better than everything crumbling because of an actual economic mistake. You know what I mean?
Right. I agree, man.
It'll be interesting, but happy to be partnered with you guys to push through this together.
Absolutely.
We appreciate you partnering with us.
Yep. All right. Well, I got one more super serious question for you guys. What's your favorite dinosaurs?
Dinosaurus Rex.
Nice.
Whichever one is fast and sleek.
The Velociraptor. Jose likes the Velociraptor.
Velociraptor for sure.
Velociraptor. All right. Got it.
Rocking.
Right on. Well, I really appreciate your guys' time. Jose, I guess you're going to get a bionic knee today. Is that what's going on?
Yeah. I'm going to get cleaned up, man. A little cleanup. Hey, this is a better time. To me, this is the best time to do it, right? Because it's like, okay,
exactly.
I'm going to be working out of the house anyways, and it's like, it's let this thing go through, and I'll be up and running in 2 weeks, hopefully. Hey, real quick, Dustin, before I forget, and Jess, maybe, are you hearing anything? Like I've been touching base with title, but no changes there really, right? They're recording. I was concerned there for a little bit, but there's no walk-ins from what I understand, but they're still doing the electronic recordings.
Yes, I still had a fund and record same day last week on Thursday.
In Riverside County?
Yeah, it was Lake Elsinore.
Okay, sweet.
Yeah, it seemed pretty normal. I mean, the thing that I've had the biggest trouble with is notaries. Like they're super backed up, and 70% of them are not wanting to go do them.
Go out there. I have a couple, so if you guys need, I know Greg's son's also notarizing loan docs. And
my son does notaries.
And then I have a notary that we're using. So those are our 2 primary notaries right now.
What's funny is it wasn't even the problem. The loan docs weren't the problem. It was both houses had solar, and the solar company's notaries, that was their excuse, was our notaries are backed up, right? And I'm like, just send the signed agreement and notarize it later. That's for you, not us.
Right.
Yeah.
Well, so cool. Well, that's all I got, guys. Just keep us posted on what you guys are shifting on marketing and how you're, we want to try to share the same message, but Dustin, we're pretty much telling the buyers exactly the same thing.
Yeah. Yeah. I'm pretty much telling them just, and in all honesty, people that were in their house and asking me if it's the right time to sell, I've just been telling them no, truthfully. Like it's just too many challenges. But that's why I've told everyone just wait a little bit. Like I know you want to sell and you want to move, but I can't with a straight face tell you this is the right time for you to do that.
Right. Yeah. Well, awesome, guys. Anything else?
Nope.
Nope, not at the moment. Appreciate your time this morning and giving great advice. So thank
much.
you. Good luck today.
Good luck.
Good luck on your surgery, buddy.
Thanks, man. See you guys.
Rate you when you're done.
Bye.
Bye.
Bye.